Very few central bankers in history, in the US especially, have known what they're talking about. They're bureaucrats and academics. And if Mr. Powell says we're not going to have a recession, I can pretty much guarantee you we will. I'm not sure when, but it's probably getting closer. I see signs that it's getting closer, but what you just said is another sign that it's getting much closer, because the Federal Reserve is saying we're not. Now, these are the same guys who said all sorts of wrong things in the past couple of years. So I don't pay too much attention. And if I do pay attention, it's usually because they're a contrarian indicator.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hello, everyone. Welcome to the Money Level Show. My name is Daryl Thomas. I want to welcome you all today. If this is your first time here, be sure to hit the subscribe button. I encourage everyone who is listening in to hit the like button to help this video get out into the algorithms. So today I had the pleasure of interviewing Jim Rogers, and Jim Rogers has a lot of experience. For those that don't know, Jim Rogers is a legendary investor, well-known author, and he specializes in commodities. Now, recently we had the Federal Reserve Chairman Jerome Powell come out and say that the Fed is not expecting a recession. However, the leading economic indicator shows that we are likely headed for a recession. And so today we have the pleasure of speaking with Jim Rogers to get his perspective on this topic so that us average people, us people that are trying to figure this out, doesn't get misled one way or the other. So tune in. Thank you all for joining me today. Hey, Jim, what's going on?
It's summertime. It's hot. But it's always hot in Singapore. We're on the equator, either hot or hot and raining.
Yeah, just Florida was nice. Now I'm back. It's a little less. It's dry heat where I'm at in Washington State, but you know the humidity was good for a little while.
Well, good. You've had new experiences. Good.
Yeah. So I appreciate you coming back on as always. You know, I feel like we got quite a few things to get into today. I watched one of your recent interviews, and it sounds like you know you're bullish till the end of the year.
Well, who knows what I said, but what I meant to say was I'm not selling short yet. I'm not buying in the U.S. at the moment, but I'm certainly not selling short because you know when these things start developing, when these bubbles, these end of market bubbles develop, they can be quite a lot of fun.
Yeah, I bet. And for me, you know, I don't want to get squeezed out or anything. So I've thought about shorting some stocks, but I don't know. The mania just keeps going on and on.
That's the problem with manias. If you can play a mania on the long side, you'll make a lot of money. But if you short it too soon, you'll lose a lot of money. If you short a mania at the right time, you can make huge amounts of money. But my timing is usually not very good.
Yeah, well, your track record says different, Jim.
Well, I do make mistakes. Yes, sometimes I get it right, Daryl. I'm quite happy when I get it right, but I do make mistakes.
Hey, be sure to email me the plays that you're in when we get off. Don't tell nobody else. All right.
Well, the problem is if other people do what I do, it usually makes it go wrong. So it's better to keep my mouth shut.
I understand. So we recently had Jerome Powell. He came out and said that the Fed isn't expecting a recession. So I wanted to get your opinion on that. And before, I want to show the leading economic indicator chart just for the audience. But I just wanted to get your opinion on the Fed and their credibility and them saying that we're not going to have a recession.
Well, very few central bankers in history, in the U.S. especially, have known what they're talking about. They're bureaucrats and academics. And if Mr. Powell says we're not going to have a recession, I can pretty much guarantee you we will. I'm not sure when, but it's probably getting closer. I see signs that it's getting closer, but what you just said is another sign that it's getting much closer, because the Federal Reserve is saying we're not. Now, these are the same guys who said all sorts of wrong things in the past couple of years. So I don't pay too much attention. And if I do pay attention, it's usually because they're a contrarian indicator.
Yeah, that is true. Some people definitely do the opposite of what the Fed is doing, and it pays off, and it prepares them. So I was researching because I heard Ben Bernanke said this back in 2007, before the global financial crisis. What was your take then? Did you hear that when he said that back then?
Oh, it was remarkable. I remember almost to this day, Mr. Bernanke said, we have a lot of very high-powered economists working for the Federal Reserve, and how can other people think they know more than we do? And how can other people think we're going to have a recession and when we're not, and the housing market is in good shape, said Mr. Bernanke back then. Well, you know the rest of the story.
Yeah, that was, I mean, it's not funny. Some people lost their livelihood and had to start all the way over. But I mean, just for the Fed to be, confident to say that, especially when the housing market was in a lot of turmoil, and many people were sounding the alarm back then. That was just pure.
People saw Mr. Bernanke say housing is not a problem, and they bought a house. They're not very happy. I'm not very happy for them either.
Mm-hmm. Do you how do you think the next economic downturn we experience will compare to the Great Recession in 2008? Hello, everyone. Sorry for the break in action, but please click the link in the description below. This is to the New Orleans Investment Conference. They are going to have some amazing speakers there, such as Jim Rickards, Peter Schiff, George Gammon, Rick Rule, and Danielle DiMartino Booth. This investment conference is put on every year by Brian Lundeen and his team, and they're going to have so many speakers there that can speak to what is happening in the macro environment, what is happening with precious metals, what is happening with natural resources, and many other things so that we can position ourselves to prosper. So thank you all for tuning in to this message. Now enjoy the interview.
Well, 2008, we had a problem because of too much debt, mainly in the U.S., but other countries as well. But Darryl, since 2009, the debt everywhere, look out the window, the debt everywhere has skyrocketed. We have the highest debt in the world in history. Even Japan has staggering amounts of debt now. Many countries are over their heads in debt. The next recession has to be the worst in my lifetime, because 2008 was bad enough. But since then, the debt everywhere, even China has a lot of debt now. And China helped save us in 2008. But even China has a lot of debt now. So the next problem has to be the worst in my lifetime. I'm just stating a simple fact. I'm not trying to scare people or anything, but
yeah.
These are simple facts.
We can't run away from the facts. The facts eventually confront us. And so, I agree. So you mentioned that you're not short in the market yet. So currently, the market has been running since the beginning of the year. I wasn't expecting it to run, but it has. The S&P and the NASDAQ has bounced back quite a bit. So is this your way? Is this your style of not fighting the Fed or just running with the trends? Could you kind of explain what are you seeing and how do you take advantage of that in the market?
Well, one of the things that I have learned over history is that in the third year of a presidential term, i.e. the year before an election, markets are usually good. because, I mean, I'm not the only one who knows there's an election next year. All the politicians know that. So they try to do everything they can to make things good and make people feel good going into the election year. It's always happened this way. I'm not saying it's good, but the facts are the U.S. stock market has always been good the year before an election, and it's happening again. And I repeat, I'm not the only one who knows there's an election next year. Every national politician, everybody knows. And so they're all trying to take advantage of it. Is it good for you and me? No. Is it good for them? They think so.
Yeah, that's pretty interesting in how that timing works out. I know that the Fed and as well as Biden have tried to slow inflation in certain ways. Biden releasing from the SPR, and so they're actually trying to refill the SPR that I just read recently. The price of oil has been going up and everything. So I wonder what is this going to look like next year? I mean, obviously, we've talked about before the buying of votes. We had the student loan forgiveness thing come up, and that was struck down. So it seems like the party that is in office is going to try and do something that benefits the people to try to, lean the election towards their favor. Would you agree with that assessment?
That's very astute. That's what politicians do. Politicians don't particularly care about you and me. They care about getting elected. That's their job, to get elected. And so they do whatever they can. If you call them up and say, we need a new playground in my neighborhood, they send some people over right away. If it's a election year coming up, you get a new playground, whether you ever play on it or not, because they think you will be happy and will vote for them if they give you a new playground. So if you need a new playground, look out the window, Darrell, call them up. This is the time to call.
Yeah, I bet. I mean, hopefully they would answer my call, but I don't think I'm as high up on their list to to respond.
This time they'll call. They'll take your call.
Definitely. So I wanted to.
This time next year they won't take your. Well, after the election they won't take your call, but until the election, they'll take your call.
Hey, that's a very valid point there. The pandering and such to get back in office, and then when they get in office, then you're getting the dial tone, and Biden changed his number, right? So that's what I think.
Hooray!
So
maybe we'll have to pay for his phone calls.
Yeah, for sure. So I'm going to go ahead and share my screen. So this was the leading economic indicator that I want to share, especially for the audience, because some of the audience, they don't really look at these types of charts, but I'm going to share it. So here, can you see that, Jim?
I see the annual rate of growth, LEI. What's LEI? Leading economic indicators. Okay.
Yep. So this is it's compiled of many different factors, CPI,
No. Yeah, I know about the LEI. Well, I mean, it's not surprising at all. And therefore, the politicians are doing everything they can to hold things up until November.
Yeah.
November of 2004.
Yep. 2024. Mm-hmm. Yeah, and it's interesting, because you see the times with the recessions and the last three that this chart shows. This was when Bush, right? Bush and Clinton. No, Bush went against Al Gore, I believe. 2000 to 2001, we had that .com bust.
Yes.
Then we had the Bush Obama here, or no, it was McCain Obama, right? And then obviously 2020 was the pandemic. So, I mean, it lines up with what you're saying around the election time. After the election, usually, the economy could turn down.
Well, I would have to remind you, and I know I don't need to, we've had recessions for hundreds of years, not just the United States, but everybody in the world. And we have not eliminated recessions. I know the U.S. Secretary of the Treasury says we've eliminated recessions, that she has degrees from a couple of fancy Ivy League schools, but I don't think she's right. But she says we've eliminated recessions. Darryl, don't believe it. Don't believe it. Recessions have been around for hundreds of years all over the world, and they're going to continue. I hope I live long enough to see many more recessions. Not that I like recessions, it's just that I like living.
Yes, and we hope the same too, Jim. And so, like, this really, that chart really lines with what you're saying. I mean, we can go back, multiple recessions. I mean, we had the 91, 92. We had 1980 when Reagan got in office. We had, I think, 75. I think that was when Carter got in, 74, 75. So I could be having my dates wrong. I just yeah, I'm trying to quote it from memory from high school class, Jim.
Well, if you remember things from high school, hooray, you're going to have a long life, a long and good life.
Yes, for
went
sure.
to high school, and I remember that I went to high school, but that's about all I remember. A long time ago for me.
Gotcha. Yeah, that makes sense. So whenever you short the market, what gives you like the confidence to say like, okay, now it's time? Like what happens in Jim's mind to say, okay, now it's time to short?
Well, I usually get my timing wrong. I wish it were that easy. I wish maybe I should just watch Darryl and find out when to sell them, start shorting the market. But no, I nearly always get my timing wrong, and I know that. And so when I decide to do something, I say, now, all right, wait, because your timing's wrong. So I wait, and I still get the wrong timing. There comes a time when there's just hysteria. If you're talking about selling short, hysteria everywhere. Some stocks go up every day. A lot of new people are in the market talking about how easy it is to make money. Some stocks just go up every day, no matter what. Those are the signs that something is developing to go wrong. But I have learned not to sell short when I see those things. I learned to wait, because hysteria or manias or, panics get out of control, and they go much longer than any rational person thinks they should. And as I say, I know that about markets. I know that markets go up more than they should, and that the hysteria lasts longer than it should. And I still get it wrong. But I've read about enough markets and experienced enough markets to know that it always works that way.
Yeah. But would you say? I mean, I wasn't born yet when Black Monday happened in 1987. So like when the pandemic happened, we kind of had news leading up to what was happening, and then we saw a huge sell-off. And that was, a lot of that was based on the news that was leading up to the pandemic. So is there any, do you normally look for any type of news? I mean, were you in 1987, were people aware of it? Was there any indication that the market was going to take a big dive like that?
Well, that's one that I happened to get right almost to the day. But yes, I mean, for several months before it finally happened, all the signs were there. Hysteria in the market, new investors, some stocks going up all the time. Everybody's saying it's different this time. Remember, when you hear people say it's different this time, mark it down. It's always a very good thing to hear. because it's a sign something is going wrong. These things always happen. You can go back over every bull market, and at the end of every bull market, more or less the same things happen throughout history. And if you are alert, if you're aware of that and are alert to it, you might, I didn't say you would, you might start getting it right or getting close to getting it right. If nothing else, you might get out of the market when you see some of these things happening. You forget, you don't have to sell short if you don't want to sell short, because that's a little complicated. But if you see the signs, the warning signs, and they happen at every bull market, end of every bull market, maybe you'll get out in time. And there have been plenty of studies that show if you just get out of the markets at the right time, you're going to come way, way ahead of everybody else. Even if you don't sell short, if you just get out and put your money in the bank for a while, you're going to be better off.
Yeah, agreed. And, I talked to my audience about some banks are paying 5% or a little more. So you got Treasury Bills, that you can get in. So there's ways that you can earn capital on your money without having it being without risking it in this market.
Well, but wait, Darryl, just one quick thing. You have to make sure if you buy Treasury bills, you buy them in the right currency in the right country. I know you're talking about the U.S., but
Yes,
many people don't live in the U.S. And if somebody's getting in Treasury bills, they get in the wrong currency, they can lose a lot of money. In 2007, there were many people who saw that problems were developing, so they bought a lot of Treasury bills in Iceland, which were paying high interest at the time. But then Iceland collapsed. So all these smart guys who were smart enough to get out and go seek safety lost a lot of money.
Wow. Yes, and that's a disclaimer for you all. I'm talking about the U.S. Jim, you invest everywhere, so you have a way deeper knowledge than me on that.
But Darryl, don't think it cannot happen in the U.S. It can. We have had U.S. panics in the past 200 years, and I presume we hope we have many more in the future, because that's the normal way of history. So be careful. It can happen to us too. In 1980, Treasury bills were yielding 21%. That's not a typo. 21%. For United States government short-term Treasury bills. So be careful.
Yeah, definitely. That's good wisdom there, because sometimes there's nowhere to hide except cash, right?
Well, be sure it's the right cash.
Yep, exactly.
Make sure it's the right cash, because if it's the wrong cash, you're going to suffer.
Yeah, that's true. That's true. I want to give a special thanks for those who have tuned in so far. Now, sorry to cut the video short. However, tomorrow, part 2 will be uploaded to this channel. And so we will hear Jim Rogers' perspective on what's happening in the commodities market as well as with the BRICS nations. And so I want to thank you all for joining today. Be sure to hit the subscribe button, hit the like button, and join if you aren't a member yet so that you can get access to the premium content. Thank you all.